The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft. Once more into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
We're 1 point higher in the S&P cash. Volume is fairly significantly higher. We have about 300 million shares more than we had at the start of the last couple of days at this time. 2.5 billion shares normally, about 2.2, 2.15, 2.1 billion shares. So significant volume as we move down to 2355 on the S&P cash earlier in the day. A lot of that was on some confusion as to when the tax bill would come through. He didn't say it specifically, but Mnuchin, which they spent, I think, a whole 10 minutes trying to get him to actually say how his name is pronounced. And he had a bigger deal with whether it was Stephen or Steve. But our new czar of finance in the United States came out, did some press this morning, and let it kind of be a little vague about when the tax plan would be shown compared to when it would be signed. He then came out later in the day after the market kind of come down a bit and said, you know what, that's what I'm saying about is August for when it was signed. If we go back and look at 1981 with Ronald Reagan, that's when he signed his. One big difference, though, is everybody is pretty sure that when that tax plan comes out, it will be retroactive, and many people have put that into the mix. We also, of course, had some people talking about whether or not the big new construction extraction equipment and, of course, materials will be needed before next year or maybe even into 2018. So most of those are down rather large on the idea that maybe you'll have to wait another year before some of those jobs actually get out. And some of that copper and steel is necessary. We'll look at some of those stocks today. But decent volume. We're about flat on the day. We were higher early in the morning, 2068 on the S&P cash. So is there anything you can really say about today so far? I don't think the answer yes, other than we're starting to see some of the weakest stocks have and start to react, well, I'd say correctly, to their long-term future. And we'll talk more about that. But anyway, you can give me a call at 877-927-6648. You can also I'm just reading a couple things here. What are we supposed to talk about? We're supposed to talk about history at the beginning of this show. Do not let me be distracted.
And it's all just a little bit of history repeating.
It is history repeating on this day in 1945. During the bloody battle for Iwo Jima, U.S. Marines from the 3rd Platoon, E Company, 2nd Battalion, 28th Regiment of the 5th Division take the mountain crest of Srbijaci. Of course, a Marine photographer, Lewis Lowry, took the iconic photograph. And as far as people can figure out, it is the most seen photograph ever in history. It was on the front page of every single newspaper, probably not on the Axis Forces newspaper, but pretty much on every single newspaper in the world that next day or two. And the most seen photograph of all time. Everybody keeps telling me how, not everybody, let me put it this way. Whiny people keep telling me that this is the worst America has ever been. I think about when we had real problems like a Second World War, or the war against the states, the North and the South, I think it's been a little bit worse. Overstating your case probably has never been a good way to go. No one believes you. It ends up being the, what is it, not the fox? What was it, the tail? Oh, no. It was the little boy who cried wolf. That's what it was, wasn't it? We got more to talk about the little boy that cried wolf with the Fed today and some other things. But let's get started. As we said, my opinion has been that the Fed has cried wolf quite a bit. While I've read some of the stuff from the Fed, there was a few things in there that were way buried down deep. And it took somebody reminding me this morning what I had seen, and then go back and look at the documents from the Fed minutes and some of the other Fed stuff the last 2 weeks. But if you were thinking that the Fed was going to raise rates when they thought it was the right time to do so, well, they're not. And it buried in a lot of the documents, although this has been around since 2013 in some of their documents, there is a big change in the way they are describing exactly when they will raise rates. There's a thing called a loss function, and it's a mathematical derivation. And basically, the Fed has a bunch of people, almost 100 right now, working on all kinds of models on the economy. So are they looking to find the best time to actually raise rates? No, they are not. They are doing something quite different. And I will play this little clip from Guy Lee Baz this morning off of CNBC, and I think it's quite enlightening.
Well, I wouldn't phrase it that way. If you step back and took a 20,000-foot look at the U.S. economy, whether or not full employment is 4.8% or 4.7% U rate, we're really close. Whether or not the right number for inflation is 1.9% or 2.2%, we're really close there, too. So on that basis, you'd expect to see some interest rate normalization. The thing that's missed in this discussion is the idea of a loss function. So a loss function is something the Fed talks about a great deal within their FOMC meetings, and it basically identifies if we're wrong, which way do we want to be wrong? And right now, the loss function suggests that were the Fed to raise too fast, too high, the downsides are much worse than if they were to just delay. So I think that loss function is really driving the slowness of rate increases, despite the fact that major economic variables would suggest we have a more normal level of interest rates.
That's it. And if you dig into the Fed documents, he is correct. This loss function discussion is all over what they're talking about. It is gone away, even from the discussions before. They are now pulverized by fear that they will raise too early and think that the downside, i.e. higher inflation and maybe some of the other downsides are tiny. What they don't want to do is be blamed that they raised too early, and now they're looking for all kinds of cover to avoid what they probably should be doing and probably should have done a quarter ago. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
After the bell tonight, Acadia Healthcare Company. What else? Applied Optoelectronics, Baidu, Herbalife, Hewlett-Packard Enterprise. I think their other one did okay. IMAX, Nordstrom, Regulus Therapeutics, Splunk, and Universal Display Corporation is what I have. Now, maybe that happened earlier this morning. I noticed it was way down. Maybe that one came out a little early. I haven't had enough time to go after everything today. But, again, pretty light on news other than the fact that a lot of it is being politically driven. And you got to watch the tweet storm that may be headed near you any time now. Anyway, let's go back and look at some of these stocks that are moving out here today. So let's go to percent advancers on the day. Or actually, that can't be right. I put this in the wrong one. Sorry, a few of these are going to be mixed up. AECOM Technology down fairly strongly today. Volume about the same as it was yesterday. Some of these semi companies have kind of turned around a bit. ATX got up to 865 today, gave back a great deal, more than half of that pop out here today. Question is whether or not it can hold the previous high now. Some of these things look like they've reversed a little bit. Bit Auto Holdings, this one actually popped up, down a little bit more volume yesterday. It'll be a close call. Blue, which had earnings after the bell last night, up a little bit. Not much volume. Not a big sign of strength. I guess they just didn't whiff as badly as some things. Carter's a nice pop this morning. Huge volume, although it's selling off a bit throughout the day today. What did we get up to? About $90.50. Back down to, what's the low of the day? 86.92. So you got a little bit of that going on out here. Just back up to its previous gap that didn't have a lot of money. So it just looks like it went up, did a 50% retrace and pulled back. Fluor Corporation, kind of a big move back down today. Volume, not that much so far. First Solar earnings, I think, before the bell this morning, and a nice bounce out of this one. Again, perpetually highly short, so it's kind of tough unless they truly whiff. A big problem in holding that one. But, run some shorts out, probably be another short opportunity on that one in the very near future. HPQ, nice pop out here on this one today with a sign of strength. So you've got everything that you wanted to see out here. I don't know what else you can say about it other than that. It is a good-looking chart. Yeah, consolidated in here for a little while. It came up to it with some decent volume. You had the breakout with volume. It's not giving a bunch of that back. So what do you got here on this one? You're right back up to the previous high that had 3 million shares with a 2.8 or 28 million shares. So I'm going to say this is pretty good all the way around. HPQ. JEC, Jacob Engineering Company. This one, although it's kind of a tight race, looks like it's going to come back into its $51 area, which would be about a halfway fill of the gap up of November 9th. NLS, huge volume day down yesterday, Nautilus, and kind of modulating a little bit of that today, but I don't see much in it. NUE, another one. Why, seems awful reversed out here. Nucor, down, not a lot of volume filled its gap up from the 13th of February, going into a fairly decent, strong up day that had 5.5 million shares. So this one may just be making a small ABC. Keeping an eye on that. SBGL, which is Sibian Gold, a little pop on this one out here this morning, a little bit of a reversal. Gave back, 2/3 of its earlier pop today. Gold at $12.50, of course, so nice pop on it. To SunPower, a nice pop in it, back up to its September 29th high at $9.37. What do you got? Another 13 cents to go on that. 4.1 million shares. You got 4.7 million shares. Had 9 million shares a couple of days ago. So actually, SunPower's got a little bit of juice going into this higher high. SQ, which is a Square. At least it's not Twitter, I think, is most what people are thinking. Actually, a pretty nice move. I think it was 25% increase in customers, and people are loving it. Nice pop, although again, 1775 for the high, and 1680 or something around there. It just needs to really hold above the 1587 level by the close, which I don't think is going to be a problem out here. You got lots of juice. You just hate when you get to that much juice that much quickly. You're probably going to, like you did today, sell off fairly quickly and pull back a bit on this one. But maybe an actual business in this after all. What else do we have? Grupo Television, nice pop back in here. It's filling its gap down and up back from the 9th of November. As we look at this, what do you got? 6.2 million shares, about 5.6 million. So you're going to get your 6 million shares. And what'd you have on that gap up? 3 million and then 6.2. So you're back filling that gap. It looks pretty good out here. I think I'd probably be a seller on this. The energy up off the low wasn't all that exciting. You did have a nice, good test of the low here, though, and that was the December 6th low that had 4.5 million shares, got tested with less than half that on January 17th. It went below that low, closed back above it, and I really can't ask for much more. Energy was too much down for me to buy it, but it did have a lower test of that low, and it looks good out here. Okay, percent advancers. Let's go to decliners. Take a look at these. Anything, of course, in the metals section, not precious metals, but metals themselves seems to be on the downside when people think that maybe it'll be another year before some of those spending projects, bridges and roads and all that stuff get going. Not that much volume so far, but kind of a nasty looking candle, taking us back into previous candles with about the same amount of volume on Alcoa. I think a lot of people were just looking for excuses to pull the ripcord, and they certainly got it today. Extern Holdings, AROC, down on pretty big volume. This is not a good-looking chart out here. You have a day that you came up on 634,000 shares. We're going back down on 1 million shares right now. So this could get kind of ugly fairly quick. My guess would be the only safe spot to buy this again would be at the $10.68 November 4th low on lighter volume. ARRS, ARRS International. This one dropped the chalupa right back into its gap back up. This time on 10 million shares already today, compared to the 7.8 million shares this gapped up on, July 28th of last year. So some nasty looking charts in this one. We'll finish up with these in the next segment.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. I guess maybe I fell asleep at the wheel there. Am I there? Yeah. Okay. So what do we have going on? Question to look at FCX. That is hitting the previous low back here at $13.13 on December 30th with that had 6.7 million shares. Yesterday, day before, 66 million shares, 36 million shares yesterday. Today, 22 million shares. Everything's beating the tar out of this December 30th low. Now, if you go back and look at the gap up that started all of this, which is on the 9th of November, you had almost 80 million shares. So this should be a fairly decent support level. What you would want this thing to do is get back down to about 1250 on light energy and maybe get the right tweet that day, and maybe you might have something. One thing you kind of dislike is the energy off this January 24th high is a little bit more than the up leg that started on December 30th. So is it all sunshine and roses? No. But certainly if people were looking for a delay in the building projects, it looks to me like these guys were exiting stage right several days ago. Nothing new in that. BZUN, BZUN, down. Not a lot of volume on this one. CLD, which is Cloud Peak Energy, nice pop down on this one. 17, almost 18 million shares. This one's got a nice gap at $4.50. I suspect that's where it's headed. CVG, which is Convergent Systems, blowing through all the recent lows around that $24, $23 level. If you look a little bit farther back, we're blowing through, of course, all the rest of these. The January 20th, 2016 low. You really have to go back to August 24th of 2015 at $20.24. Looks like the next support level in that stock. EME, EMCOR Group, dropped the chalupa. This one had kind of a nice move up. Again, you really never had the big sign of strength that you should have seen in these big candles, like on the 9th of November. You had kind of three advancing white soldiers, kind of went out, never really had that kind of big sign of strength. We're right back down to it. But now you're going to have some fairly big signs of weakness going back through all those candles. Question I've had, is this a three-gap play? And you could make a fairly decent work on that, other than three-gap plays normally have bigger gaps and more volume. This never really had anything. But that being said, I think this thing's going back to at least 56.50, 56.75, something like that. You can give me a call at 877-927-6648. You can also email me at path@tfnn.com and post a message in the den like Danny. What else do we have? FMSA dropped the chalupa Fairmont Centriol. FMSA is the symbol on this one. Opened a little higher and sold off almost all the day. Volume picking up a little bit, but not all that exciting. This looks like a lot of stocks are already, especially ones that you haven't heard a great deal about, already headed back to fill some of these gaps much below. The one not getting the winner whistle today is L Brands. It's actually getting the wimpy one out here. L Brands, they own Victoria's Secret. Some of the other ones down on monster volume, 22.5 million shares already. See if we can go back a little bit farther and see just how, I mean, you're back into the gap that kind of started this whole thing. Goes back to the May 8th, 2014 gap up. Had some decent volume that day of 3.8 million shares. Of course, nothing to the bone-crushing and soul-crushing down day that you've got today in this thing. I guess her secret is she's not selling anything. It's got to be it. Okay. NVIDIA, we talked about this one. Fairly nice sign of a top, at least short-term, medium-term top. Your first level of support is about 99 cents away from today's low. We'll see how this does. I suspect that we are going to get a bounce out of this. At any point, someone's going to try to rebuy this. I don't know how far it's going to go, though. You tested the December 28th high at 119.93, 57 million shares. Came along, tested it with 18 million shares. You went above it. You closed below it the same day, which is even better than closing below it the next day. You had some sell-offs on earnings. Pretty much everything you were looking for. Heavy volume off the top with 41 million shares. Continuing that today with 32 million shares. Now, you just need more than 37 million shares. So my guess is that you're going to get that today by the end of the day. And as I've said, I think this is going to probably mess around here a little while. But this may be a very nice short setup with this gap at about 74, 75 bucks wide open. And the next real level of support in this stock. I think everybody's going to try to buy it all the way down. As I said, in my thoughts, they had a very good and kind of backed into a market in machine learning that most people hadn't thought of. Most of the people that have already been in that business have bought their products. Gaming is good. But again, I think that there's some things that really make or did make this kind of a short-term thing. NVIDIA probably is going to have a tough road ahead of it. And I think there's competitors, not with video cards, but other products that are going to take into that AI business. And this thing could quickly be, in a year, could be a $50 stock yet again. QEP, which is QEP Resources. None of these resources stocks are going to be looking good today. Down on heavy volume, blew through the November 2nd low, so one of the weaker ones. This thing's been selling off for a while. SINA, which is Sina Corporation, another one that dropped the Chalupa. Huge volume, 2.58 million shares already. Next real low, any part of support comes down at $60.46. So you got another $7 lower out here. I think this is just one of these ugly candles that could have two following it back to back. U.S. Silica Holdings, another one, SLCA, just bone crushing out here. I thought it would be much more in the tech companies, but maybe this is coming. But certainly a lot of these stocks holding up on little or no volume. This one wiped everybody out back and through, back to November. All the trading is pretty much underwater. We'll be back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. I had a lot of people asking about Tesla. I said I'd get to it before the end of the day. We might as well just talk about it now. Everybody knows this is not a stock. I like the company. I like the product. Don't confuse the product with the stock. It has to do with how many shares they are, the value of the company, the forward growth, and what people are willing to pay for it. What we did have, though, was a lot of people getting finally to the resolution that if the car that they say they're going to have out shortly is going to sell for $38,000, what is the cost of that car to build? And if you kind of read between the lines, they're basically telling you if that car sells for 38 grand, they're going to be losing a few grand per car. So they're going to go from a car that they say that they're making 25% margins on, but still losing 70 cents per share for this quarter. And say that they're going to go into and lose a ton of money. They've also said that they're going to build another $20 billion worth of factories like the one that they're building now, if that number is correct. Maybe there'll be smaller ones. They weren't real good on saying how they're going to build it. My problem, though, is them getting enough lithium to actually make those, or if they think that they've got some other battery technology that they're not telling anybody about. But so far, it's all been about lithium-ion batteries. Some of the posters in the den have been posting about the problems with just getting the amount of lithium you need now. Each car approximately is about 700 laptops worth of batteries. So is this going to put a hurt on the rest of the electronics industry if they actually start selling that many cars? If they try to sell their car at a loss, the stock's going to tank. If they try to maybe change the price to about $55,000 instead of $38,000, how many of the people are going to want their $1,000 back that they put down as a refundable deposit? There's a lot of stuff going on in this company. None of it makes any economic or financial sense. But, you know, this is a CEO that got a lot of press by just coming out and saying wild and speculating wildly about a variety of things. I tend to wonder if he isn't just the greatest con man of all times. Not that he's really kind of short-changing his customers, more the shareholders. because it's been one of these things where all he has to do is come out, say he's going to Mars, ignore all the problems and all the ideas that would have to be solved for him to actually do it. But he gets patted on the back. Oh, we're going to Mars. That's great. The problem is we're not going to Mars. We're not going to Mars in 10 years. We might be going to Mars in 20 years. But if we started today, it'd still be 10 years of just experimenting, going to the moon, so that we'd be ready to go to Mars. No one has any data on what being gone for 932 days would do to a person. If you're up in just in the International Space Station, you don't get out of a wheelchair for, 4 or 5 days? And that's with you exercising 2.5 hours a day. So the question is, on kind of decent gravity, like the moon has, what's the curve look like? Anyway, I could spend the rest of the show just talking about the misconceptions of him yelling about how he's going to Mars when I know he's not, and he's not going anywhere close. It'd take just 10 years if we started tomorrow just to get all the knowledge and figure out everything that we need to know just to get to the moon and live on it, much less on Mars. Especially if you're on the moon, it's 3 days home. If you're on Mars, it's 900 some odd days back around. Quite, what happens if you need a surgery? You cut somebody. Where's the blood go? I'll tell you, everywhere. It would spray all over. Anyway, like I said, it's just one of my pet peeves because I know that he's talking out of his posterior on it. But a lot of what he does is just pronounce huge amounts of stuff. And I think eventually everybody that's done that before has finally hit the wall of reality. And I think that we're probably going to see the financial wall of reality this year in Tesla. And I would not be surprised at any time to wake up and find that something leaked or somebody came out something and see this thing. As we said yesterday, a lot of these stocks could just open up 30, 40% down. This is certainly one of the stocks that could do that because there is nothing financially behind this company except huge amounts of expenditures and losses, and probably even much bigger losses. And the reckoning day when someone figures out that this new car that's supposed to make them so popular can't make money at what the price they said it was going to sell for. So I can, like I said, spend the whole day on this one. But it's Hyperloop. Oh, there's a great video that shows what would happen if I just was tooling along the Hyperloop and shot a rifle through the side of it. Very interesting, and it doesn't end up well. It kind of ends up like the Bass-O-Matic. So very interesting ideas. But this is kind of like the equivalent of Jules Verne saying that there's this mystical power source and actually building a nuclear power source and a nuclear sub. The world's away from just kind of dreaming about it to actually implementing it and not just sending people to a fiery death on Mars. Oh, this is very interesting. We've had some 60-odd missions to Mars between us, the Russians, and the Chinese, even one from the Japanese. But the interesting fact is that of the 24 successful missions to Mars, we've had 44 that have ended in abject failure, and no one wants to bring that up. If you were going to get on a plane and fly across the country, would you on a plane that had a 2/3 failure rate just to go across the country to say that you had? Again, like I said, I could spend the whole day on the misconceptions on it, but I think we should move forward. Martians are shooting down. That's good. Got to keep me happy. But we aren't going to Mars anytime soon. Although we could go to the moon fairly quickly. We need to figure out actually how to get a bulldozer to the moon so that we can start building giant domes of dirt to hide in when the first solar flare comes through. We were very lucky going to the moon. We were there for 3 days, several times, and didn't get a solar flare. But it's very interesting to see that they thought that the odds of the astronauts dying before they got back to the Earth in the 60s was 100% if there was a decent solar flare. Yeah, a lot of good ideas out there. It's going to take time. We'll be back after this.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And, what's today? Oh, it's Thursday. So we've got Tom O'Brien for the next 2 hours, Andy Heck at 5. Tom O'Brien's going to be doing a seminar here in Tampa that you can attend. Check out the front page of TFNN. I'm sure it's on it. ACAD, Acadia Pharmaceuticals, up a little past their $38 high that it had on August 4th, and with a little bit of volume out here. So some of these are looking a little bit better. Alliance Data Systems back bounding on this huge gap down that had 3.3 million shares. We talked about this one yesterday. This one pretty much has filled its gap So you might look at that one as a potential short. American Electric Power Company. This one looks like it could be yet another big ABC on the way down. Let's take a look at this one on the expansion side of it. 49.70. Is this it? No. I'm looking at this one here, which is the A. This being the B. And this being the C. Maybe a little bit too much of a retrace. A little bit more than the 618. But if this thing failed right here, and there's kind of a nice little ledge over here back in September on American Electric, it would be pretty interesting. 1-to-1 would take you to $53.91. I think this is going to be kind of interesting to watch out here to see whether a lot of people start piling in this right now. I think there are probably better trades out there is what I'm trying to say. But if this is a safety trade back to electrical production, would be very interesting to see how this trades the next couple of days and see what people are thinking if they're looking for some place to hide this out. Maybe a little bit of that in gold today. Baxter International, we've been watching this one go back into its gap. $50.01, the October 25th high. We are through that today, but that almost 10 million share high gets in here today with 2.6 million shares in Baxter International, BAX, so keep an eye on that one. That one's very interesting. HBAN, Huntington Bancshares. We talked about some of these financials looking kind of weak up here at the top. You were looking for 16, almost 17 million shares. Got into the high at 1438 with 12 million shares. This thing's just gone sideways a couple of days. Again, a lot about when those interest rate hikes are going to come. HCP, I think they had earnings, did they? I think they had earnings. Back into its gap. This one has just no volume yesterday and the day before. I think they had 3 million shares. So pretty light. If you go back to the gap down, it's about 10 million shares. So this thing is filling its gap with fairly light volume. A lot of opportunities out here if the market does turn down to find stocks that have very light volume at the highs. HPE, Hewlett-Packard Enterprise, I think that was yesterday on earnings. December 8th, 2472, 16.5 million shares. Yesterday you get 7.6 million shares. Today, 8.6 million shares. So you're hanging at these highs, but not all that much volume up here. And you just have to think that this is going to be one of the weaker ones if it fails up here. Well, we're done for yet another broadcasting day on the Power Trading Hour. I will see you tomorrow, same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.